Okay, so like I said, I don't have a lot of a specific format for this meeting other than, like I said, to take your questions about the test or anything else that you'd like to ask, review any concepts you'd like, um, anything like that. As far as reviewing the exam, like I said, I put together a video if you haven't seen it, which is just me reviewing the exam review. And I will say I've checked that exam review up against the exam, and again, I'll say whoever wrote the exam review did it while they were looking at the exam questions, because it tracks pretty closely. So it'll be a good thing, a good review. Even if you don't listen to my video, it'll be a good review to go over the exam review. So any questions from either of you that I can address? Okay.
The questions I have are for chapter 12, and they're in the additional self-test.
Okay.
And the first one was number 4.
Okay, well,
and then 17, 20, and 22.
Okay, so let me pull it up, and I'll do my best. The thing with the self-test is I don't have an answer key, so when I'm answering you, I'm just doing it myself. So I do my best for you anyway. So far, we've done okay on them, huh? So let's see. Just take me a minute to get to it. I should know you by now, Patricia. I should have the self-test up because that's where you do a lot of your studying, huh?
Yeah.
Yeah, I should recognize that and not have to like pull it up each time. All right, let's see, additional study topics.
They're very helpful, especially when you do the walkthrough, because whenever I'm taking the exam, I come across the question, and it's like your voice is telling me how to think through the question, how to catch the little things, so I can make the best decision.
So it wouldn't benefit you, but you're saying it might benefit the next class I teach if I were to do the walkthroughs on the additional self-test as well?
Oh, absolutely.
Okay.
Your way of thinking through the questions are very, I don't know how to explain, but it's like, it gets in my head, like how to read these questions and know how to think through them.
Right. And what's challenging about teaching, especially online, is that might be true for you, but another person might hear the way I talk through it and say, man, that just makes me more confused. And so, it's always a challenge to what works really well for one student doesn't always work perfectly for the other. But that's the best we can do is I guess the best we can do is do the best we can do, huh? So, okay, now I'm sorry, but so which questions did you say on the additional self-test?
So it was number 4. That was the first one. And I actually had a specific question about this one because I was under the impression that whenever you are acquiring anything related to a building, it would be under the investing activities because it's a large asset.
Right. Yeah, so this is kind of a trick question.
You can read the question.
Right. So it says, in what section of the statement of cash flows will the issuance of bonds payable to acquire a building be reported? And so what's tricky about this is they're issuing the bond payable not for cash, but they're issuing it to get the building. So there's no cash actually changing hands here. So in essence, they're reaching out to the people who own the building, and they're saying, how about we just give you this bond? We issue this bond, and as the bondholder would get to receive interest, and then at the end they would get their cash. So this would be reported in D in the non-cash investing and financing activities, because it's not, there's no cash flow here.
But wouldn't the people like giving the bond get money?
They will eventually. So they will when the bond matures.
And therefore there is cash.
Yeah, I'm having a bad internet connection. I'm going to try plugging into my, because you're breaking up on me, and I know it's not your fault. I'm sure it's my home internet. Let me see if I can improve my connection a little bit here. Let's see.
Oh, okay, so not
Sorry.
right away. Okay.
Well, just give me a second.
Okay, I think we're.
All right, what I'm trying to do is improve my internet connection. I think with everybody home, I have a bunch of bandwidth flowing out, and I'm not. It's really choppy, so I apologize. Can you hear me now better or worse?
Yeah, no, I can hear you.
Okay, sorry about that. I don't know how much you heard of my answer.
I remember you telling me that the bonds they will get the cash when they will pay out when the bond matures.
Right. So that's correct. So when we issue a bond, normally what we're doing is we're getting cash in return for that bond. But in this case, instead of getting cash, we're getting a building in return for that bond.
Okay.
So there's just no cash flow happening.
The other questions I had were so the other questions I had were related to the direct method, and they're number 17, 20, and 22.
Okay. Sorry, I'm still trying to fix my internet connection and see if it'll be any better if I just plug in directly. All right, so you said 17, 20, and 22?
Yes.
Okay. Let's see. Okay, so this says, under the direct method, cash receipts from customers are equal to sales plus the increase in accounts receivable. So an increase in accounts receivable is going to mean that I did not collect all of my sales. Does that make sense? So this is going to be false, because what happens is in the direct method, first of all, in the direct method, we don't even worry about what we do is we just say all cash received from customers in the operating section. But an increase in accounts receivable means people owe me more. So if I sell $100,000 worth of goods and my accounts receivable goes up by 20,000, it means I'm only going to be collecting 80,000 from the customers, and the 20,000 is still owed to me. So this one's false.
Okay, yeah, that's what it is.
Okay, if it had said the sales less an increase in accounts receivable, then that would be the amount that we received from customers.
But that would be the same for the indirect method as well. So
right.
It would be the same thing.
Yeah, except that we wouldn't, in the direct method, we wouldn't report it that way. In the indirect method, in the indirect method, we would report it as, we start with net income, right? And so we say net income, and then we adjust net income for those changes, well, for depreciation and any non-cash expenditures, non-operating expenditures, and then we adjust for changes in the current assets and current liabilities. That's the indirect method. In the direct method, what we do is we just we just say, how much money did we collect from our customers? And that would be any amount of sales that we collected directly from the customer, plus any amount of accounts receivable that the customers paid off.
Okay. Then the next one, I'm sorry.
No, I'm sorry. I was going to ask, what was the next one? 20
and 22.
Okay. Which of the following items is reported on the operating activities section statement of a cash flow prepared using the direct method? So let's see. And so this would be D, cash payments to suppliers, because the others, the loss on the sale of a building, that doesn't really get reported anywhere. Only cash we receive from selling a building or cash paid out for buying something would be recorded. The increase on accounts receivable, again, we don't worry about that as much as we just worry how much money we received from customers or we paid out to suppliers. And then depreciation expense doesn't get reported anywhere unless we're using the indirect method. So the real trick to the difference between direct and indirect is with indirect, we start with net income. So we don't really take into account revenue or expenses individually. Instead, we start just with the net income. And then those adjustments come because of that. So like depreciation expense, which reduced our net income, but isn't a cash expense, has to be added back in. But with the direct method, we just specifically say, this is cash paid and paid out and cash received in. So any adjustments for changes in assets or for expenses don't occur with the direct method. Does that make sense, or does it make it more confusing?
It sort of makes sense, but I don't understand why they don't account for, like, why they don't add depreciation.
Right. Well, because with the direct method, we just never deal with it, because because we're just saying, this is how much cash I received from my customers, and this is how much cash I paid out to my suppliers. There's never any question of non-cash expenses. Whereas when we start in indirect, when we start with the net income, we've already factored in all the revenue and all the expenses, and then we have to adjust for that depreciation because it's not a cash expense. We have to pull it back out of there, or we add it back in, actually, is what we're doing.
So why do they say it's easier to prepare and less costly if the other one is more straightforward?
I think the reason is because in a real life scenario, I've got to look now at every single one of my cash transactions and see, or each one of my sales transactions, and separate out the ones that were cash from the ones that weren't. Whereas in real life, we normally track things like we're preparing an income statement. So we're tracking all revenues and we're tracking all expenses. And then all we have to do with the indirect method is start with that income statement, that net income from the income statement, and then just make some adjustments to it, as opposed to tracking each time cash moves, which is what we have to do with direct.
Oh, I see.
So
okay.
I think the indirect method is easier because we're starting with a report that we already make anyway, and then just making some adjustments instead of creating a whole nother report from scratch. Does that?
Yeah.
And just so you know, like now, nobody actually creates any of these reports by hand, or almost nobody. Like most of us use accounting software. I use QuickBooks for my small business, and I just say, create me an income statement, and it does it because I've entered all my data in there, or create a statement of cash flows, and it does it for me. But it's important for anybody who's learning about accounting to understand the process by which it's made, even though in the real world you almost never have to calculate it because it's done by computers for you.
I'm so glad.
Well, but if you're the accountant, then when there's an error, you've got to understand the whole process well enough to dig in there and figure out where the mistake's at. That's why you have to know the process. But if you're going into marketing, then it was enough to learn the process and then move on. And so I don't know what you're going into, but.
Definitely not accounting.
And okay, so 22. Oh wait, is that what we just did? No.
No, we haven't done 22.
Okay, 22. In the statement of cash flows using the direct method, which of the following would not appear in the operating activities section? So cash receipts from customers would definitely appear. So it's going to be, again, the depreciation expense. So because in the direct method, it has cash receipts and cash payments. That's normal. But depreciation expense, again, is a non-cash expense. So it's not cash coming in or going out. With depreciation expense, we paid the cash a long time ago to purchase the asset, and now we're just recording the the portion of that cost spent in the past as an expense today. So I think what they're really trying to get at here is that depreciation expense in both of those questions is not part of the statement of cash flows using the direct method.
Okay, yeah, that you kind of had answered this before, but it makes sense.
Okay, good. So other questions? Looks like we lost
I'm
Toru.
good.
Okay.
I'm good, thank you.
So I'll just say this on here. I think I mentioned it last week, but maybe for anybody who tunes in later. So I had made a statement that people tend to score roughly about the same on the final exam as they do on the other. If I look at their first 5 exams average, and I'd say that's plus or minus, say, 5%. So say someone who averages a 70% usually scores somewhere between a 65 and a 75 on the final. And for the people who've already completed the final, that's held true. With one exception, we had someone who scored quite a bit higher than their average, which is awesome. And we had one person that scored quite a bit lower, but I think they had just figured out how much they needed to get the grade they wanted. So it looked like they didn't do the whole thing. Anyway, so, and recognize that the final, like, some people are really stressing about this. It is worth 10% of your grade, which means if you got a 0 on the final, then your final grade would be 10% less than it is right now. And so and if you got 100%, it would be 10 percentage points higher than it, or not higher than it is right now. I take that back, or less. But it's not like an end of the world thing unless you're sitting right on the edge. I guess is what I'm getting at. It's not worth totally stressing out about. It's worth giving it a good effort, and you'll be fine. Okay. Patricia, you said you don't have any other questions?
I actually do. I
Okay.
was just, it's a question, something you said in the final exam review.
Uh-huh.
And then I was reading here on my printout. It says there are no questions about ratios, but is that just for the chapter 11 ratios, or is that throughout the semester?
Yeah, there's no ratio questions on the final exam.
Okay.
Which is awesome, because that's a lot to memorize. Okay, well, if we don't have any other questions, then awesome. We're good. Well, good luck on the exam, and have a great night.
Thank you. Thank you for the help.
All right, thanks. Bye-bye. Oh, there you are, Toru. Are you back? Nope.